Employees are responsible for filing income taxes and employment taxes on salaries and wages. This is my today's topic. I am going to explain it with some examples. What is our mission? We will explain every small topic with definitions, questions, and classification. Our goal is to apply any tool to help you understand the topic. This is Nashimar, the CEO of InfoTaxPayer.com. We are a team of CPAs and EAs. I request attorneys, tax preparers, taxpayers, entrepreneurs, students, economists, and the most important politicians who create laws to subscribe to my channel to receive the most up-to-date and accurate tax information to enhance their knowledge. Let me share with you some characteristics, how to establish estimated taxes before I explain it with some examples. Each pay period for employees, they have to pay income taxes and employment taxes on their salaries and wages. To distribute the tax burden throughout the year, calendar year taxpayer must pay estimated tax payments for investment income and self-employment income in quarterly installments. The dates that are important: number 1, the first quarterly payment is scheduled for April 15th. The second quarterly payment is scheduled for June 15th. The third quarterly payment is scheduled for September 15th. And the fourth quarterly payment will be made on January 15th of the following year. Using the safe harbor rule for payment, a taxpayer can avoid underpayment penalties by paying a minimum amount, such as 90% of the taxes paid for the current year. Number 2, the tax from the previous year will be 100%, or if the adjusted gross income AGI is higher than $150,000, you will have to pay 110% of the previous year's taxes. If the taxpayer owes less than $1,000 in taxes after subtracting withholding or credits, they can avoid penalties. Taxpayers who make quarterly payments are required to pay 25% of the safe harbor amount on every estimated payment due date by April 15. A Form 1040 for a calendar year taxpayer is required to be filed. Form 4868 is the way to request an automatic extension. Again, Form 4868 is the way to request an automatic extension of the due date, which is October 15 for taxpayer. Regardless of any extensions to the filing deadline, any tax liability remains due at the original due date. I'm going to explain with an example how to calculate estimated taxes for each quarter. Yusuf is determining the method for making quarterly payments. In 2025, he anticipates that his employer will deduct $30,000 from his 2025 salary and his 2024 AGI is $185,000. Given that his 2024 total tax is $51,000, using the safe harbor estimate to avoid an underpayment penalty, how much 2025 tax must Yusuf pay by each quarterly estimated payment deadlines? So in this case, Yusuf had AGI of $185,000, which is exceeding to $150,000, and his employer only withheld $30,000. And his liability for 2024 was $51,000. Since his gross income or his AGI was exceeded by $150,000, therefore he is required to pay 110% of $51,000. Because what are the safe harbor rules? A taxpayer either has to pay 90% of the current year or 100% of the prior year, or if the AGI is more than $150,000, then he or she is required to pay 110% of the prior year. So in Yusuf's case, his AGI was more than $150,000, and his last year taxes was $51,000, and his employer only withheld $30,000. So $51,000 minus $30,000, so Yusuf is required to pay additional $26,100. So he has to pay the total liability of 20 based on 2024 in 2025 was $56,100, whereas his employer already paid $30,000. So Yusuf has to pay additional $26,100 into 4 quarters, which are due on April 15, 2025, June 15, 2025, September 15, 2025, and January 15, 2026. And each quarter he has to pay $6,525 in order to cover his liability of $56,100 based on 110% of 2024 liability, which was $51,000. I'm going to use another case study with the same data what we used in the previous case study. Only the AGI is changed. In the previous case study we used $185,000, whereas here we are going to use $148,000. Since it was more than $150,000 in the previous example, so we use 110% safe harbor. In this case study we are using less than $150,000, therefore we are going to use safe harbor rule of 100%. So AGI of 2024 was $148,000. His total taxes was $51,000, and his employer only withheld for 2025 $30,000. Therefore, he is required to pay $21,000, which will be divided into next 4 quarters. The first quarter is due April 15, 2025. The second quarter is due January 15, 2025. The third one is September 15, 2025, and the last is due in the following year of January 15, 2026. And each quarter will use the same payment, $5,250, to cover his deficit of $21,000. Thank you and God bless you.